Okay guys, as we head into a bad earnings season, a market crash, and a central bank crisis, Bank of England says they will sell off emergency gilt purchases as soon as risk subsides. Now, if you don't know, Bank of England actually started to turn the money printer back on, even with how bad things have gotten. Now, the way the Bank of England is rolling right now, it seems as if some things will depreciate in value and they have potential to default. Also, Germany just announced a 200 billion relief plan to combat inflation. It's clear as day right now, the Federal Reserve and people in power have no greater education than the next guy. Now, this is Goldman Sachs. We don't see a soft landing outcome where inflation returns to target quickly without crushing activity. That means more volatility and pressure on risk assets, we think. And like much of Wall Street, he said they also prefer investment grade credit as yields better compensate for default risk. Plus, high quality credit can weather a recession better than stocks. BlackRock said they prefer inflation linked bonds and are staying cautious on long term nominal government bonds due to persistent inflation. Similar sentiment was seen from Goldman, which lifted credit to neutral over 3 months, maintaining up in quality bias as they said investment grade credit yields look attractive in both absolute terms and relative equities. Morgan Stanley has also recommended IG bonds. So again, these three firms are coming up: BlackRock, Goldman, and Morgan Stanley. Goldman said that rising real bond yields are continuing to be a major headwind for valuations across assets. Current equity valuations may not fully reflect the risks that are out there and might have to decline further to reach a market trough. Explaining its view, Goldman has said that since the great financial risk of '08, a TINA, there is no alternative strategy by investors, has been a key support for stocks as they were more attractive than bonds. But investors are now facing TARA, where there are more reasonable alternatives with the situation reversed. If you take a look at the chart, this is the S&P 500 earnings season, the dark blue. Now, what's to come is a terrible earnings season, meaning this will substantially drop. With that being said, government bonds are on the rise as of right now. If they're crossing or at least getting close, this gives no incentive to purchase stocks as bonds have little to no risk. Goldman and BlackRock sour on stocks as recession risk rises. BlackRock says to shun most stocks as recession has not priced yet, and Goldman downgrades global shares to underweight over 3 months. So Goldman is saving up capital and they're storing cash away. Goldman Sachs also yanks the free coffee perk as bankers return to 5-day week. Seems like they are just scrounging for capital. Investors should avoid most stocks with recession risks rising, according to BlackRock. The Fed and other central banks have underestimated the severity of the recession that their rate hikes could trigger, the asset manager said. This all implies a clear sequence: over tightened policy first, significant economic damage second, and then signs of inflation easing only many months later. Earlier, BlackRock threatened to halt trading in the UK market. Now, it seems BlackRock and Goldman Sachs are not in the best position, and the latest disclosed ownership BlackRock has in AMC is 25 million. The reason I'm bringing this up is because it's always in the side of their pocket to save themselves first, and a share lending, share recall by the institution can and may definitely happen depending on their cash flow situation. And I don't think other firms can help them out because everybody is in a bad spot. Goldman Sachs also has almost a 3 million share disclosed ownership in AMC. Now, just in, Facebook Meta announces hiring freeze and warns of restructuring. We've talked about government entities controlling Meta, controlling YouTube, Facebook, Instagram, and banning people for what they say, but why a hiring freeze and reconstruct it? Well, the job claims report came in and it actually fell to 193,000 in week ending September 24th versus the 215,000 forecast. The number of people already collecting jobless benefits fell by 29,000. Okay, well, why did the market drop substantially? This is actually a good thing, but a bad thing in the Federal Reserve's eyes, and the reason for that is because Federal Reserve interest rate hikes are not yet cooling the economy. In fact, there are more stories in the media about worker shortages than layoffs. What this means is that the Federal Reserve interest rate hikes are not slowing the economy like they wanted to, and due to that factor, the S&P 500 is currently falling, currently making new lows for the year and hugging this trend line. If this breaks under this trend line, we have a lot of falling room to go. Now, I'm not giving you a price prediction on AMC, but if you place the fib time zone on where the cycle reset, where you saw the U back here, where we have been tracking the January run-up, you will see that we are actually coming up on another substantial pivot point, where you also may expect a huge run-up in the stock, and where I expect a huge run-up in the stock in the near future. But overall, guys, this is all the DD I did for you. It's a ticking time bomb for these shorts to absolutely get crushed in AMC, central banks to get crushed. The Federal Reserve doesn't know what they're doing, and overall, everything will come crumbling down. And mainly what big institutions want is retail to sell last, or at least retail to be stuck and sell off. But I think most people invested in AMC have forgot about the money in general and don't plan on selling no matter how hard life gets. I think we are sitting pretty, and I'm getting ready for a move. That is it, guys. Make sure to subscribe, share the video, turn post notifications on, and let me know if I missed anything in this video. Also, these videos take a few hours of research and an hour or two of editing, depending on the video length. I try to make it the best quality, so make sure to support the channel in any way possible. Also, guys, make sure to get your 10 free stocks linked down below and pinned in the top of comments for downloading Moomoo and depositing $100 in there to get your 10 free stocks. You can also trade with that 100. Also, make sure to download MEXC Global using my link pinned in the top of comments as well. Love you all, guys. Lottery Stocks out.